Hello and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Friday the 24th of January. We've had, certainly in the last 24 hours, a significant flight away from the dollar. This came on the back of a big move into safe haven assets yesterday after the Chinese data that disappointed. The PMI came in for Chinese manufacturing below 50, which was into contraction territory and also under expectations as well. And then that was exacerbated in the afternoon by the US data, which showed housing. Existing home sales came in slightly below expectations, and also a bit of a manufacturing PMI data also disappointed. So that really saw a flight towards safe haven assets such as gold benefited significantly. The yen also saw a significant bounce, and also US treasuries as well. So what we saw yesterday was a big move away from the dollar. All these dollar charts pulled, these major dollar charts pulled significantly in the negative direction for the dollar. And stock markets as well was largely lower, all around about % off, and that carried on over into Asia overnight. Obviously, with the strength of the yen, the Nikkei tends to have a poor day, and that was again seen this morning. But with the outlook today is more of a bit of a consolidation, I think, following on from this strong move that we saw yesterday. There's not a great deal of data out today, so investors might be licking their wounds somewhat today. And there could be a bit of a consolidation period, or maybe even retrace some of the moves. But certainly depends on how the outlook is actually seen overnight. It'll be interesting. I mean, the chart of the day that I'm looking at initially is going to be the S&P 500, and certainly the S&P has not really had, as you see on this chart, not really a major impact on the longer term outlook. You're just back to what has now become this uptrend that dates back to October, bounced off the bottom of that uptrend there, and you've also got this 1813.55, that key breakout support remains intact. You're still above this 55-day moving average, and if you look at the momentum indicators, they're all a little bit corrective, you could argue, but certainly not looking in any sort of bearish configuration. They are slightly falling away, but yes, there's nothing too bearish about that at the moment, certainly on a longer term basis. So maybe this is just seen as a bit of a dip and could be actually bought into at some stage in the coming days. So it'll be an interesting day ahead, but I think it could well be one of consolidation. Looking at the intraday chart of the S&P, again you saw this support of that 1815 low that remains intact, but also these intraday hourly technicals, the RSI became oversold back below 30. The stochastics have actually given a crossover buy signal at the bottom here, so it could actually be a bit of a bounce in fact today. The initial resistance comes in at 1832, but what you would also argue is that it looks to be a bit of a pivot level around this 1840 level here. For the S&P tends to be used as a bit of a pivot level, so watch out for that. Maybe that'll be the key indicator, 1840. If it can break back above there quickly, then maybe that will be the bulls back in control and off higher again, so that'll be interesting today. But anyway, check out the other morning report charts on our website for euro dollar, cable, dollar yen and gold, and I will speak to you soon. Thank you.